Dear class, today let us continue with our discussion on a journal. A journal may be subdivided. A journal, as we discussed earlier, that journal is the book of prime entry, and it meant to record a transaction, and it is where the transaction are recorded for the first place. In a big business, recording of all business transactions in a one journal would be inconvenient and a delay in collecting required information. So the journal is therefore subdivided into many subsidiary books. And this subdivision results in the following advantage. It might lead to convenience. It reduces the size of the journal and making convenient to handle. And again, division of labor is possible. If you divide the journal, the different person can write a different journal. And it may able a classified information. So each journal will provide information relating to a particular aspect of the business. For instance, a purchases journal will only tell us their credit purchases, sales journal for credit sales. So subdivision of journal can be explained by the following chart. We have a journal. The general journal is what we discussed earlier, and we will have a special journal. So this special journal may have a special, which is the cash. And the cash journal may be, we may prepare a receipt journal for recording only receipt transactions, and the payment journal, which we may end up recording only payment transactions. And we may have the other special journal, which is related to goods. And in this aspect, we may have a purchases journal, which are recording purchases on credit, sales journal that are recording sales on credit, return outward, that is relating to returns of goods once purchased on credit, and the return inward journal that relate to goods sold on credit, and the bills journal for receivable. And so a general journal, also known as a journal proper, these are meant for recording all such transactions for which no special journal has been kept by the business. Otherwise, we may have those special journal which is meant for specific purpose. We may have cash journal, as already explained, that this means for recording all cash transaction, cash receipt to record cash receipt, cash payment to record all cash payment, and goods journal. This means for recording all transactions relating to it may end up purchases journal, meant to record all credit purchases, sales journal, that is meant to record all credit sales of goods, purchases return journal, meant for recording return of goods once also known as return outward journal, and therefore sometimes known as return outward daybook. Sales journal likewise for recording a goods sold on credit. They also known as a return inward journal or return inward daybook. We have a bills journal. This means for recording all bill of exchange or promissory note received or issued by the business. So bill receivable journal is meant for recording all bills of exchange or promissory notes received by the business from its debtors. We have a bill payable journal that meant for recording all bill of exchange or promissory note issued in favor of creditors. Sorry, written data, but so cash journal. This cash book can be of any of the following type. It might be a simple cash book. It might be a two-column cash book. It might be a three-column cash book, or multi-columnar cash book, or cash receipt book, or cash payment book. So for instance, for a simple cash book, if we use this example, enter the following transaction in the books of Mr. Nikano. We have Mr. Nikano started a business with a thousand, bought good for cash 85,000, paid him 195,000, deposited in the bank 4 million, purchase of his furniture 465,000, sold the good for cash 3, paid wages in cash 120,000, paid stationery 40,000, sales cash sales 2,500,000, paid for miscellaneous expenses 45,000, received the cash from Takolok for 85,000, withdraw for domestic use 250,000, paid salary 400,000, paid rent 90,000, paid electricity bill 5,000, advertising 40,000, paid into bank. So paid into bank, some cash has been paid into bank, 2,500,000. So to prepare a simple cash book, it means that as usual, we are going to have a debit side and a credit side. This is the cash account. So in March, we have a capital, or it started the capital 500,000. On March 2, we make a purchase of 65,000. The March 4, we paid more 95,000. March 6, we paid to bank 4 million, and by office furniture, we bought the same date 465,000. On 9th March, we make sales, cash sales of 3 million, so we debit this cash account. And on March 12th, we pay wages 120,000. By 13, we pay stationery 40,000. By 17, miscellaneous expenses 45,000. And on 15, also we made a sale 2,500,000. On 19th, 15th. On 19th, we received it from Tarok for 85,000. And on 21st, we make a drawing of 250,000. 22, make a payment of salary 400,000. 25, make a payment of rent 90,000. And 28, we make a payment of electricity 35,000. 29, we make advertisement 40,000. And then on March 31st, we paid into bank. So to bank 2,500,000. So that we remain with the balance, which we make a total of debit and the credit side. And as we know that the total on the debit side is greater than, it will become our balance 12,485,000. So we make the difference become our balance get down 3,720,000. That's how we prepare a simple. But again, if we make a preparation of a 2-column cash book from the following information from Minawar. For instance, we have a cash in hand 50,000 and a cash into bank 10,000. And they bought goods from Harry for cash 200. And they bought goods on paid check for them 2,000. Sold the good to Moan for cash 250. Received the check from Sharam on one good were sold 800. Purchase all the typewriter. They repair it for cash 250. Bank notified that Sharam check has been returned dishonored. They debited the account with respect of that with 10,000. Received the money order from Harry 25. sham settle account by means of check, and the 20 being interest charged, 820. But again, we have some information. Continue. Withdraw from the bank 10,000, discounted bill 1,000, own accepted by check 5,000, withdraw for personal use 1,000, paid expenses 2,000, withdraw from bank for private expenses 1,500, purchase machinery from Rajik for 5,000. They paid him by means of bank draft purchase. It's a 5,005. Issue check to RAM 1,575. Received check for commission from Hara and they deposited in the bank 5,000. Become bankrupt and they paid us half of the debt, 250. Received the payment. Ramesh, who owed us 500, become bankrupt and they paid us only half, that's the 250. Received the payment of loan. They deposited the 300 out of it into bank. Paid rent to landlord Moan 500. Interest allowed by bank 30. Half yearly bank charge. So if we are to open a 2-column cash book, we'll have as usual a debit side and the credit side. The left hand side will be our debit side and the right hand side would be the credit side. So both we have a column for date, for detail or particular. On the debit side also we have an amount which is denoted only cash, and the other particular column will be meant for bank. And in the credit side we have a date particular, a column for cash and a column for bank. So all these transactions in January, for instance, we open an account, the balance brought down, we have 50,000. But again, on January 2, we make a transaction that involving a bank and cash. We credited the cash account by 10,000. And the same, we debited the bank account with the corresponding account from a cash account, that is the 10,000. And on January 3, we make a purchases by cash. So we are going to write it in there, a cash column, purchases 200,000. But on 4th, we make also a purchases, but this time we use the bank balance. So purchases, but in the bank column. So at the end of the day, on 5th January, we make sales, cash sales, 250. And on 6th, we make a pay, we receive some money, bank balance from Sharam, 800,000, 800. And on 9th, bank charge 10. On the same 9th, we have cash transactions that January 10, a cash contra entry, that is the 10,000, is withdrawn from a bank, and this is bought in cash. So cash and being deposited withdrawn the bank 10,000, and the same being deposited in the cash. So at the January 20, we make a bills payable 5,000, and on 18 we make we receive the bill receivable 1,000, Ramash paid us and we received 250 on 29. 23, we have trade expenses we paid by cash. And there were a drawing of 1,500. This drawing were from bank. We bought a machinery on 26, machinery 5,000, and include a bank charge of 5. On 27th, we buy furniture by check. So this goes into bank column. 1,575. And the commissions of 500. On we also bank a certain amount on January 30, where we draw 3 cash, which is 3,000, and the same have been deposited in the bank. So we credit cash account, but with the same transaction we debit the same account, but in this column of bank account, debit bank account by 3,000. On 31st, we pay rent by check 500, and on 31st, we make a payment of rent 500,000 in terms of check. We credit bank, and they also bank charge 50. They also we receive the interest bank 30. So in this case, we are now, if we are done with all transactions, now we have to make a comparison between a debit side and the credit side of the account. But here you have to remember that we have two accounts in one account. It is called a 2-column cash book, but basically the debit of cash and the credit of cash are treated separately from debit of bank and credit of bank. So we make, even if we are closing these accounts, we have to make a comparison between the cash on the credit side and the cash in the debit side. So if you take that, you found out that the cash column, the cash column on the debit side is the 65 to 50, and in the credit side is run short of. So the difference becomes 48,800. But on the bank column, the credit side is greater. That the credit side is greater, it is the 26,940. So it will become our closing balances, so that the balance carry down will come on our debit side. That will turn into our debit credit side as opening balances as 10,250. That makes the end of our presentation.